Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week and a look forward at what might happen in the next week. And hopefully lots of good ideas, opportunities for you throughout the show. Well, this week saw the stock market mostly meandering. They were waiting for the jobs report to come out on Friday, and that did spark some action. Job report better than expected. 255,000 jobs created. Unemployment rate at 4.9%. I'll talk a little bit more about that in a moment. S&P 500, well, that traded down to 2147, but then moved up on Friday in a strong way and touches at a new high. Stock market based on the S&P up just under about 0.5% for the week. Dow, which had 7 straight days up till the middle of this week on the downside. Wow, 7 straight days, that's a lot. Actually also getting a big gain here on Friday. Earnings continued to be the big movers. If there were any highlights at all during the week. Bond market, well, it was choppy. Tried to get a couple of rallies, but then came the good jobs data on Friday, and the bond market moved down again. We've been bearish on bonds, and a lot of good trades coming in there as each of these rallies had failed. Now, as the bond market moves down, then of course interest rates go up. That helps the dollar move to the upside. Kind of a domino effect that goes on. So dollar having a better time of it here late in the week, and that affects gold and silver. As they move inverse to the dollar, they're getting some pretty big breaks here on Friday, and especially silver down well over 3%, really on a big downside move. Going to show you the gold late in the show, that gold chart on the short term, and you're going to see that we're looking for it to struggle a bit more. So those payroll numbers came out up 255,000, 4.9% unemployment rate. Let's talk about the great spin that our government puts on these numbers. So that's the U3, 4.9%. That's the headline number. But the U6 number, which is a much broader look at the unemployment rate, well, that's the unemployed, the underemployed, the discouraged workers, those part-time people. They are in that U6 number, 9.6%. Yeah, that's come down a lot, but that is a much truer number. Employed, the total percentage of employed in this country, 58% employed. It's been stuck there at that very low number, but you can see that if only 58% of the people are employed, it's pretty hard to figure out where all the money's going to come from for all the programs that they want to put together here. Free college, food stamps, 46 million. Got a lot that I could add to that list. The central banks, they created the Great Recession and now have this, at 0% interest rates. There's just a dark cloud over all of the economies around the world. So CapEx spending is very low, and the plans for future CapEx very low. Capital expenditures, and that has got our growth incredibly low. Just reported at 1.2% growth around the world, really slow. So no matter what they give you with this spin, the Great Recession continues. Real growth not there. Talk about spin. President Obama comes out and just a little brief comment on this, saying that they didn't pay $400 million ransom to Iran. Keep me from laughing on that one, because just about the same time they let go of the 4 hostages. So he can put all the spin on he wants it. Nobody's believing it. Let's see. $400 million out there. That they paid. 320 million people here, the population here in the U.S. They say they don't pay ransom. I don't pay ransom. So It's $1.25 for me. I want my $1.25 back. I'm asking them for my $1.25 back because I'm not paying that ransom. And one last thing about spinners, there's plenty more out there. Hillary Clinton comes out and then lied in an interview about lying. She's probably one of the master spinners out there for sure. Of course, Donald Trump, no better, picks that battle with the Gold Star family and does that for like days. The stupidest battle that I could ever see. The people that are, our choices to be elected here, and it's shocking. Stock market at new highs. And it could only be that investors are on drugs or something that we could see new highs under these conditions. It's not going to be much longer. And some of my viewers know what I've been talking about as far as how long more I think this bull market's going to last. It's not much longer. Let's take a look at what the market actually did this week as we look at our 60-minute chart of the ES, the S&P 500, and you can see that right here as we look at this last week, the gray area being the overnight trading, the white area being the day trading during the day. Monday, basically, you could see there the big event was oil breaking the $40 number. That kind of pushed everything down. World markets, U.S. markets, they were kind of all softer, and that oil breaking didn't help it at all. 3.5% it was down on Monday. Tuesday comes, a lot of talk about Japan stimulus, and investors very overwhelmed by what the Bank of Japan said. So we got some more sliding there. That was the Dow's seventh day in a row on the downside. Bonds down because of the heavy corporate calendar. Sure, with 0% interest rates, okay, 0.5% on the Fed funds, the corporations want to borrow as much as they can at these rates. So the corporate calendar is very high. That's very competitive now for the bond market as a whole, and that's got bonds being heavy. Here's that big break as oil was up and then reverses to the downside. On Wednesday, stocks were pretty sloppy overnight. Oil inventories, they came out and they actually broke the market a little bit right in over here. It's not really enough to see at that point, but then oil moved back to the plus side if you watch that intraday trading, and that helps stocks right in here. World market still pretty much weak again on that day. ADP came out and it was on the strong side and gave us some sense for a good number coming on Friday. That's always not the case. Thursday, big news that came out was the Bank of England. They cut rates, add QE. Not to the extent that the Bank of Japan is doing, which is buying ETFs and buying up corporate bonds, but they're going to buy corporate bonds also. So there's some more of this drugs that's coming into the investor world as the central banks pour money in just to give us the illusion that everything is just fine. Do you feel just fine? World markets did rally that day. The FTSE's doing better. It did good on Thursday and on Friday, with that up 1.5% and 1.7% on Friday. Friday brought the jobs numbers, and you could see the big lift that came in the market as the S&P 500 cash moves up to an all-time high. Dollar strong, and gold and silver move sharply to the downside. So that is a look at what happened during the week. Take a look at our earnings and economic calendar that you can see right over here. Earnings, well, they are going to be really thinning out. We're getting into this part where we get a lot of the retailers. The retailers have been really marked down, so you got to wonder if the likes of Coors here on Wednesday or Nordstrom here after the close on Thursday, whether or not those stocks can really get hit anymore. They've been really incredibly weak. So that's really what we're in right now. Some of the stocks reporting don't even matter. Rackspace getting taken over. Solar City here getting taken over by Tesla, so a lot of that doesn't matter. And Friday comes JCPenney, which is the company that I believe, before you know it, is going to be putting out signs that say going out of business. Boy, JCPenney is, to me, one of the real fantasies out there, because they're not competing in this world at all. That is it for our opening segment. Hope you enjoyed that. And we are going to be right back with our best and worst of the week. For the best of the week, well, it's earnings and earnings again, all except for the one that moved the most this week, which was Rackspace, which is being taken over by a private equity firm. Big mover in there. We actually had a bullish pattern set up. Let's show that to you as we look at our cycle analysis in Rackspace. This is one of our stocks, of course, that's in our 325 stock analytical universe. Here's your big downtrend right over here. You could see that. Each of these stair-step downward cycles, very, very clear. But then you had the bullish base formed. You can see this is how we had it projected on the upside. And as they are going to get taken over in here, the stock gets bought out. So really nice looking pattern in there. And that stock will be taken out of our universe now. We're going to have to look for some more to add in, because we've fallen down by about maybe 7 or 8 stocks based on takeovers and going out of business. All right, so other stocks that have had big gains. Next one we're going to look at is Copa, CPA. This is in the airlines category, and we look at 11 different airline stocks. This is not one that we often trade, and we'll take a look at that here. We're going to look at CPA, and you'll see here that this stock also in a very bullish pattern. Now, these airline stocks overall not great. This is really in the Latin American area, and maybe it's because of the Olympics. It's got a little standout. Good market sentiment in there, but the earnings beat. Analysts upgraded the stock 11% up on the week, and the other airline stocks, they are just not looking good, most of them. In fact, some of them are very weak. So you can see in here it's got this nice upward trend. There's your rising peaks and there is your rising bottoms in this cycle. We're going to look for a peak here probably in the next couple of weeks, and then rolling over. You could see this one peaked in the first 3 weeks up. This one here peaked in about 5 or 6 weeks up, and now we're 5 weeks up right over there. So we're going to be looking for this to roll over soon. We're not all that excited about it. How about Twitter, TWTR? This is very worth talking about. Well, because it had a big hit on its earnings report and then gets a bump in here after that debacle. They apparently are coming out with a new ad format. It's come up to this resistance zone. I actually want to look at the daily chart really quickly and give you a peek at that. This is a big area, resistance here that you can see the 34-week moving average coming down there. It really tried to sell off, but when you get a big break on earnings and then a big downside gap and you recover, it's usually a good sign. I'm wondering if there isn't more to it. In that area around 2070, that could be a reasonable target in here. Look at this daily chart. You can see our cycle analysis in here as this big break on earnings came a little bit late, but perfect touch of that support area. And then moving up, having closed that gap is a really good thing. I'm not really that big on looking for gap closes, but I think in this case it's good, and I would say that this is saying something pretty good about Twitter, that maybe there's something behind it. Maybe that new ad program is good. I've been saying all along they're going to have to find either a sugar daddy to take them out of this thing, or they're going to have to come up with a format that's a significant model change for them. So I think they're working hard at that, and maybe Twitter does better all on its own. A massive amount of millions of users. I'm on there all the time, and I've been highly critical about the value of Twitter, except for communicating with my closed active group of people that pay attention to what I say. So Twitter, maybe there's something going on in here. GoPro gets a gain of 11% also. Take a look at this stock in GoPro as we look at the weekly pattern. This is a much improved pattern and building a base in here also. Let's take a closer look here, and you could see this base building that's going on after the total debacle of everybody loving their cameras right over here. And now the hope is for, well, lots of things, a lot of cameras going on law enforcement, also their drones, and you can see the base being built in here. So what we're looking for, maybe a few weeks of a dip right over here, but then turning up again, and that could be a time when the stock really starts to move. So analysts really turning positive on it, and we could see that based on what we're seeing here in that stock. So weekly pattern in here, you could see it getting support at that 89-day moving average. The slim ribbon in here, which is our momentum indicator, and you can get that on our website, is really setting up positively in here also. So overall, we got to say GoPro is improving, and we're going to hope for a pullback in there and an opportunity to buy it. AIG, that moves up. Also, here's AIG on this weekly chart. They move up 7%. Earnings a big beat. And they're buying $3 billion of their stock. This stock moving up, you can see that significantly in here, and following the cycle rhythms very nicely. Probably getting to a point where it looks like it's a little overdone there on the upside. They're buying their own stock, but I got to tell you, AIG is a big hoax. Here's the stock, right? It's $59. It looks like it's doing pretty well coming off that bottom. I'm going to switch this to a 20-year monthly chart just for you to see real quickly. Oh my goodness, what is that? 2,000 on the stock? Did it ever really trade over there? Well, of course not. Here's the financial crisis in here. They got themselves in huge trouble. They had to reverse split the stock. You got to go all the way in here like this to make the stock look like a stock again. Essentially, the company was wrecked. This company should be out of business. There's like no way that this company should have survived the financial crisis. And if anything, they were highly responsible for it, right? One office of guys that's selling a mass amount of CDOs, that's collateralized debt obligations. And did you see the movie The Big Short? I don't even think they talked enough about AIG in here. And the company should have gone out of business, but because of the massive bailouts, they saved this company. They were afraid of all the tentacles out there that could hit the rest of the world. You got to allow the purge sometime for us to be able to have real growth, organic growth. But of course, don't get me started on that. So AIG looking much better, right? But got to tell you, this is not a stock that has any credibility as far as I'm concerned. So that's a look at AIG, up 7% on the week. And you could tell I'm not all that excited about it. Merck gets a gain this week, up 5% on the week. Because of they have a competing drug from Bristol Myers. I'll show you Bristol Myers in the worst of the week because that stock just got absolutely wrecked because of a poor result on a drug study. Talk a little bit more about that later. Merck gets this nice looking gain, as you can see right in here. You could see the rhythms that we have for this projected as a nice pattern in here. You could see the rally and the sell-off, the rally and the sell-off, and then the next rally working nicely. And we would say that these areas right up over here are probably an area of big resistance. I wouldn't be surprised to see this pull back. Usually, on a massive size company like this, one drug being more favorable is not going to make that much difference. I actually think it's a short. So for traders, we'll be looking for a pullback there in Merck. Another one we're going to look at in here is DIX, DKS. And this one I'm also going to talk negatively about. Look at the bounce, look at the move in here, and look at the gorgeous cycle patterns. Beautiful rhythms, as you can see, the rally, and look at how it follows these cycle patterns. Cycles are rhythms of money flow in and out of the market, and they're often consistent. You measure them from low to low, and you could see all these lows coming correctly on time. Uh-oh. Another low due. DIX, why is it up today? Well, 5% because they have a new program about Team USA. And that, the Olympics are starting tonight, right? Well, they have this Olympics program, and the stock is up 3 point something percent. This big gain in there. And I actually think that that's a fake and a good shorting opportunity in Dick's. And I think that that one is a high short possibility for a trade. So, basically, Merck and Dick's look like they're up, but I think that there are opportunities to sell on those stocks. One more stock worth mentioning is Triple D, up 10% on the week. That pattern is stronger. Here we go with another stock that is moving up, and I'm suspicious about. What killed these stocks in the Triple D category is these Triple D is these 3D printers that are in hubs. In other words, you can send your 3D through software to these 3D printers, and you don't have to own it. You can essentially rent the 3D printer from these hubs. And that really killed the sense that there was going to be any massive growth in the 3D category. So this stock gets a big move, and I'm very skeptical of that one also. So take a look at 3D. That is it for our best of the week. Wow, you wouldn't know that was the best based on some of my attitudes. And we're going to be right back with the worst. For the worst of the week, as I mentioned in the previous segment, it's Bristol Myers, a huge break in there. They had disappointing results on a cancer study for small cell lung cancer, and this is really a bad looking chart in here. Take a look at this as you get this big downside red line. It's all on Friday, really. We have this giant high volume downside gap. Man, there must have been a lot of hope, and this is a big company also for one drug to do this kind of disaster to the chart. This is key. You see this low right over here, the rally that came right on time there. You can see each of these rallies coming right on time. And then because of this amount of break, notice it comes right down to the 78.6%. What it means is that you have all this time left to fall, so you're going to guess you're going to get a bounce in here, right? It breaks through that support level, and then you would think it would fall again. That's all about 5 or 6 weeks time. So we don't think this stock is going to survive another move to the upside, a rebound. It's likely to get sold again, but this is very high volume in there. So we're going to look for a bounce, and then we're going to look for another move to the downside. Trip, T-R-I-P, in the online travel category. This is also a bad pattern. They are really maybe very reflective of the slowdown that maybe that we're seeing in the consumer category, with all of the weakness in airlines and the weakness in retail. This 11% down on the week on a sales miss. Priceline did a little better on some sharply reduced earnings expectations. This pattern is bad. If it gets underneath here, it's going to have all this time left to fall. Big downside gap, as you can see. We're going to look at that here on the daily chart. As they miss on their sales, that gap, high volume, and then following through today, that's not a good sign. We're going to look for a bounce that fails in there also, as Trip is a bad pattern in there. This, by the way, was on my list of riskiest for 2016. Priceline also on that list, and so far that was looking good early in the year, but Priceline's been much stronger. So that's Trip down 11% for the week. Last week we did a special video on the solar stocks. FSLR is what I'm going to put up right now, if I can get this up properly. There we go. And this one is breaking down right now. What I mentioned was that I liked solar stocks, but not this one. I thought it was very high priced at a 17 PE. And that there was much better values in CSIQ and SunPower SWPR. Those stocks doing much better. This stock breaking down. So just it's a matter of valuation, I guess. But their earnings beat, but they guided lower. So I don't like this stock. I think it's got a lot of risk in here, and I'd much rather be in those other two stocks. Take a look at FCX. This is a stock that's done real well in the materials category, And now it really has a warning in here. You could see that we have drawn in an inverted head and shoulders top with the measurement. You can see that right there. Of course, our chart subscribers do get that. And there's no breakout in here yet. So it's just like getting to the neckline, and it's giving these top warning right in there, and then looking like it's going to roll over. We caught the whole move in the materials based on this DBB. That's that blue dotted line and rising, and that told us some buying was coming in this group. But now this thing looks like it's topping, and I'm wondering whether we're not going to see a couple of months of consolidation in here in this group. Maybe it's reflective of more of this deflationary stuff that's going on out there. Take a look at gold, GOLD. I say deflation, that's that bond prices that are so high up there, and the consumer stocks being so poor. Here is GOLD, that's Rand Gold. Now, gold's, as I said, really getting hurt in here on Friday as the dollar is stronger. I don't think the dollar is going to stay that strong, and I think the gold, the metal, is going to stay in a range. But gold, the stock, Rand Gold, really looks like it's got some corrective time in here. That's about 6 weeks before it finishes that there. So I think if it gets a rally, it's likely to roll over. This has been one of my favorite gold stocks and one of the best traders out there, along with Newmont. That's also a good trader. So GOLD down 6% on the week. One other favorable or unfavorable mention is Diamond Offshore, DO. That's down 7% on the week. They beat on earnings. Analysts in there are very negative. Actually, the whole offshore group is getting a lot of bad press out there, saying that their rig count is not likely to grow. There's going to be, if there's demand, it's going to be onshore. So that has got this group under a lot of pressure. I liked Seadrill, SDRL. That had a bad breakdown. The best of the offshore is RIG, RIG. That's got a decent pattern in it. In fact, it's even worth looking at, so I can show you that. So if you had an urge to buy an offshore driller, and I've had some urges to do that and not liking some of the things that I did, I think RIG, RIG is maybe the best of the group. It's been trading in this kind of pennant formation. Again, you can see that inverted head and shoulders in this one also that has not broken out yet. There's a timing low due right over here and looking like it's getting ready to turn up. We'll have to see if it can get a breakout in there. So I'm looking at Diamond Offshore, which is in the worst of the week. I have to say that this one is better, and you could see this on the daily chart here. You have this engulfing pattern, which essentially says this area around 10 maybe is the worst in rig. So in some is the worst that we'll see in rig. So this offshore drilling group in all disappointing to me, and if there was one I would buy, it would be rig right now. The others are kind of looking sickish. That's it for the worst of the week. Hang in there, because here comes our short-term view. I'm just going to take a couple of moments of your time here. I'm excited to tell you about our rankings and trade setups. It's really an amazing service. We just added 9 stocks, which takes us up to now the 80 best traded stocks, ETFs, and futures. That's all for investors and swing traders and short-term traders. This is really, I think, a very unusual and great service that we have. What we do is we rank these 80 symbols in 3 different time frames for all different styles of traders. And we publish a table each day which gives you our momentum rankings in these 3 time frames for each of those 80 different symbols. And then we put out daily setups on most days, usually between 1 and 3 setups. And our goal is to give you really an advantageous entry. I think that the entry is the most important, because then if it's done well, it doesn't put a lot of pressure on the trades, and we've had a really good record on it. I want to show you our website where you could learn more about that. Here is the askSlim website. You can recognize that because the player, as you see it there, is where You can watch our weekly show, the askSlim Market Week, and all you have to do is click on that tab right over there. But if you want to get some information on our rankings and trade setups, all you have to do is click on that tab right there. You can see as I do that, there we go, and it's loading, and that's how you can watch our rankings and trade setups. Do you want to know how we're doing? Well, let's go to the top here. We've added this new marquee. We've been doing this now for about 6 months. We've had a total of 204 setups. Of the 204 setups, 20 I can't even say it, 65.2% have given positive results. In other words, they've been favorable, and they've given you a great opportunity to make a profit on that trade. Only 27% have been negative. In other words, they didn't give you a good opportunity on the trade. So that's like 2.5 to 1. That's fantastic for option traders that are often getting threatened in this market. And our last 15 setups are always in here, as you can see. And we've been 12 positive and 3 negative on those last 15, which is like over the last 3 weeks of time. So you can see this is a great opportunity. If you want to learn more about it and about signing up, go to the top of our website where you can see membership options. You can see that right over here, and on the top of the website, all you have to do is click right over here and highlight it. Level 3 is Raise, which is our rankings and trade setups plus all our videos. Level 4 is All In, which is all of our charts on your TOS platform plus rankings and setups and all of our videos. So I think a great opportunity, and please watch that video on the front of our website. You'll learn about what we're doing, and this is really about raising your odds of success. And here comes our short-term view. All right, short-term view of the coming week. This is where we look at daily charts, looking at about the next 4 to 7 days. Just want to let you know that we have a week off coming. We do that once a quarter. So in the coming week, we will not have Market Week. The next one will be on 8/19. For all of our members, we'll be sending you a calendar to let you know what our schedule is for the next week. We still have videos coming out. We still will have our rankings and setups, and our chart subscribers will be getting their chart link. So basically, it's kind of a part-time week off for us. So we, every single week, have to be accountable to what we've done in the last week. Not only, as I've shown you, have we been hot as far as our rankings and setups goes, but it makes sense that our short-term performance as far as the 5 major markets we look at also has been very strong. We're going to rank this week at 90%. It's just been amazing how these patterns have worked really so nicely. If there's anything that I would say didn't work, I mean, somebody's going to tell me I shouldn't be dinging myself for this one, is that I expected the S&P 500, which would come up and test the resistance zone at 2180 to 2188. Well, I thought that would come a little earlier in the week than it did, and instead it came on Friday. So I got the pattern a little bit wrong, but I can't find much else with anything in these 5 markets. We're going to look at them. I'll show you what I was looking at, and also look at what I think is going to happen in the next week, and maybe a little bit longer because, well, we won't be here next week. Here, we're going to start out, as we always do, with the light crude market. We'll put up /CL, and we'll look in the on the daily chart. And you're going to see here, as I move this over and get ready, take a little closer look right in here and put in /CL on the daily chart. So last week, what we kind of thought would happen would be a kind of chop around early in the week, and then it would turn up We thought it would get down to about 40.30 and test support. It actually dropped only a little bit lower. It didn't stay down there long. It kind of broke under that 40 number very quickly. And then got the nice bounce. We thought it would move up within 1 or 2 weeks to about $43. It got up into the 42s right there, and that looks to us like that may be surpassed again early in the week. So what we're going to look at for this coming week is that it has a little bit further rally. You can see how we have a drawn in there, testing this resistance area in the area of 42.25 to 43.25. That's right in here that you can see, but we're looking for it to roll over. We don't think this first rally is going to hold. So if this pattern is good, making a major bottom that you could see on that big pattern, then, which is what we've thought, then what'll happen is that it'll rally, it'll sell off, and it won't break that key level. Now note, see the note that I have in there for our subscribers, that if that key level is broken, the intermediate term turns bearish. So we don't want to see that happen. We don't think it's going to happen. But right now, what we would like to see is it get up right in here and then roll over. That's kind of what we see for the rest of the week. So that is a look at, and there's our big look right there at our big patterns there in light crude. So now we're going to switch over to the gold market /GC. We have this set to 2 years, so we get all these cycle alignments proper, and then we're going to come in. So what we said last week was that, well, basically we thought that the probability was high that we're still stuck in this area between 1310 1370, and it is really proven to be the case. We talked about this minor 78.6%, and that has really held it, and you could see the big downturn today as the dollar strengthened on those payroll numbers. It's now falling into this support zone. So we thought it would get up to about, last week 1370. You could see it got just a little bit above that there, and then roll over. And we saw a weekly pattern that we talked about, the weekly engulfing, that we thought would stop the upside move, and you can see it plainly did that. We thought it would be a net small week, and you have a net small down week in here. And this pattern in here, sadly for gold, looks like it's got more on the downside. This is a minor support area that it's in right now. We expect maybe to get little bounces, but then overall we expect this target range of this 1314 to be the testing the bottom of that range again. So that's about a 2-week projection that we're looking at down there, and we don't think that gold is going to be able to hold any rallies in here, or silver. The silver pattern pretty equal to that, and also not looking great. So it would take something very unusual that had the dollar breaking in a big way to have the gold market move back up. We don't think that's in the cards right now, though we do believe that's in the cards for later in the year, still with a potential of around the area of 1470 or 1480, but I'm giving away a little bit there. So in this case, we still think it's stuck in the range, and we're going to look for a choppy down market for the next couple of weeks. Next thing we're going to look at is the euro currency /6E. What we thought last week is that it was going to hit resistance and between 1240 and 1275 and roll over. Would you look at that? It did it exactly. Came right up as we expected right in here, hit the resistance, and rolled over in this minor support area right now. And our target on the downside was about the 111-ish area. We said it'd probably be an area to be doing some buying. Well, you can see it got below that, and it's right now at 111 exactly as we're talking about this. We think it'll test it the next couple of days, to another downtick in here, maybe to 110.5, and then turn up. That's really the pattern that we have drawn. And then we think more fooling around over here. So you could see with this short-term resistance a problem for it, and we don't think that there's going to be a whole lot on the upside. An attempt to get up right over here, and then probably some more zigzag over there. So that's kind of a look at the next couple of weeks, since we're not going to give you anything next week on the short-term view. I would say this was pretty much a bullseye here in there. So lots of people writing us about our call on the bond market because they've done really well on that. This was another strong call, and get a little closer look right in here. And what we said last week is that we thought it would be a down week, that the both the ZN and the ZB, the 10 and the 30 year, were entering into a sell zone, and that the depth of decline would depend on how much rally we can get in the S&P 500. Well, the S&P 500 rally didn't come until the last day of the week, so you can see that the decline in the 10 years here and in the 30 years didn't come until the last day of the week. Well, it did fail right there from exactly the resistance that we looked at. What are we looking at? The next 6 to 8 days on the downside right here. Could that mean in the stock market the next 6 to 8 days are the opposite of that on the upside? Well, we're going to look at that in a second. So you can see we pretty much nailed this. So we're going to look for, another, we'll call it week and a half on the downside here in the bond market. So as far as the stock market goes, we had basically all along in here been positive. We got a little negative in that crazy Brexit break, and then we believed it was getting back on course to the upside to move to a new high. We expected the new high would come early in the week, and then it would kind of roll over. Well, it kind of kept eroding with the Dow as the energy stocks were really weak, and then the rally came in the market late in the week. So we wouldn't say we nailed that. We got the pattern wrong, but our attitude was right. So what we have going on in here now is a slightly adjusted pattern from what we were looking at in the last week. We thought it would kind of come up in here and make that high and then come down right through the end of the week. So it got that second boost right in there, but did pretty much as we said. We said that we expected it to get between 2180, 2188. I don't know why I'm even dinging myself, because here it is at 2182. Not exactly the pattern we're looking for. This rally that we've been waiting for to tell the story is finally here. And how's it going to do? Is it going to fail up in this area? Our guess is yes. If it breaks through, the next resistance level is up at 2212. I don't have it drawn in here. I do have it on our weekly chart, which I don't show in this segment. That's really for our members. So right around 2212 is where the next resistance is. If it gets through here, we'd expect this to happen. If it doesn't, we would expect this to happen like this. So what we're going to do is call the next week and a half as the stock market basically starts to churn in this area and fails, either from 2188 or 2212 area. And so we're going to call potentially a few more up days right in here. Remember, we said the bond market had about 6 more days, so 6 to 8 days. If this is how the pattern works properly for us, what we would look for is this, is we have it drawn right in here, and then one more rally out in here. Probably get to that. As you can see, we have drawn right in here. That's this pattern right here that you can see. Probably get to that 2212 area before this is all over with. We're going to call the next week and a half as choppy. In other words, a little more rally, a bit of a dip, and then one more move to the upside, this being a choppy time, and what we think is a time that the market is starting to set up for some failure. Talked about that last week. We think we're in the final stages here. And with just some brief period of time left to go, we talk a lot about that in our picture, our bond market big picture, which our members are going to see this Tuesday, which we just got done recording that one. So bond market big picture coming on Tuesday, and then on Thursday for our members, an unbelievably powerful segment on trader psychology that I think is really going to be beneficial to all that watch that. So just a lot of great stuff coming. I hope you have found a ton of great information here. Today, we work hard on this show. You can tell the immense amount of preparation that it takes, the just hours and hours of doing chart work and analysis and putting it all together, all of the correlations. So I hope that you find a lot of value in it. I'm asking you to share this show with everybody that you know that has any interest in the market. We really would like to get our exposure up, and we're on several sites, and we're doing a great job, and we love hearing from all the great emails we're getting from everybody, and we really do want to increase our exposure. So please do share this show with everybody that you know that could be a potential beneficiary of our work. That's it for Market Week for this week. We're going to see you, as I said, in 2 weeks. We want you to be safe out there in this crazy world. Have a great weekend, a great couple of weeks, and we are always wishing you great trading.
Well, I'm going to